welcome to ET Now Startup Central, India's first and only daily show dedicated to startups, technology and entrepreneurship. I'm Chandra Srikanth coming to you live from India's Startup Hub, Bengaluru, and we've been tracking one story very closely for the last few weeks. We've done detailed episodes on the much talked about Flipkart-Walmart deal. We reported first last week that the board of Flipkart has okayed it, that a tentative agreement has been signed, and we are reporting this evening that this deal is likely to be announced tomorrow. This is what we've picked up from our sources, that the Flipkart-Walmart deal, which we've been covering extensively right here on ET Now, on ET Now Startup Central, is going to become official tomorrow. What we are also picking up is Walmart's CEO and President Doug McMillon will be in India to really sign off on the final deal. We also understand from our sources that as part of this, Walmart will be investing $15 billion and Alphabet, which is Google's parent, will be investing $1.5 billion. It's important to remember here that the $15 billion from Walmart will obviously be a combination of primary and secondary, considering they are going to buy out many of Flipkart's big investors. So what money finally goes into Flipkart, that's something that we have to wait and see. And the valuation pre-money is likely to be around $20 to $22 billion. So that's a big validation for the Indian startup ecosystem. But in what is a part of this deal, one of the co-founders of Flipkart, that's Sachin Bansal, he's likely to sell out his 5.5% stake completely and exit Flipkart. However, his co-founder Binny Bansal, as well as the current CEO Kalyan Krishnamurthy, will stay on and oversee the transition, work with Walmart. This will of course be a fully owned subsidiary of Walmart. An IPO perhaps is some years away, because Walmart will set very clear financial milestones for Flipkart before even taking it public. But on the whole, if you look at this deal, it's a big validation for the Indian startup story. The fact that an exit is happening, and a mega exit at that, for investors barely 10 years after this company was founded. So that's going to be the big deal announcement tomorrow, and we will be bringing you live updates right here on ET Now. But on to another aspect. Ruchi Bhatia picks up from her sources that the income tax department is already assessing possible implications of the Flipkart-Walmart deal and what it will mean from an income tax perspective. It will be interesting to see, what clauses will apply here, considering Flipkart itself, the holding company, is headquartered in Singapore. A lot of its VC funds, though they are based here, are domiciled in other countries. Ruchi, take us through the tax implications. How is the taxman going to zero in on the implications, considering Flipkart is headquartered in Singapore?
Absolutely. In fact, Chandra, this is very interesting. The Flipkart-Walmart deal has entered its last lap. And even though the final negotiations are going on back home here in India, the tax department has already started examining, the kind of structure that this deal would have for any kind of tax liabilities. Now, remember, there were a lot of fears that the government may just be looking at this case, and this would bring back the fears, the memories of the Vodafone tax case. But what the tax department is essentially saying is that they may look to invoke Section 9(1) of the Income Tax Act to assess any liabilities, because remember, post the Vodafone case, Section 9(1) of the Income Tax Act was amended to ensure that if a majority, if there is any deal that is happening for which a majority business is in India, then the people are supposed to, then that company is the company that is buying and will be getting the capital gains tax is liable to pay taxes. Now, in this case, the Income Tax Department believes that Flipkart's majority business, although they have their registration done in Singapore, because their majority business here is in India, it is dependent in India, they have warehouses here, this deal may just be taxable. They will be reviewing the deal structure, they will be seeking clarifications if at all, and assess any sort of a tax demand if it arises. The second part here, Chandra, is Section 195 of the Income Tax Act, which deals with TDS provisions. The government believes the Income Income Tax Department believes that the TDS provisions will also be applicable in this case. The only way that Flipkart and Walmart can ensure that they do not have to pay any capital gains tax can be from the third way, which is because Flipkart is registered in Singapore, they can ensure that the benefits of the Singapore Treaty with India can come in and can kick in this case. But that will happen if and only if the limitation benefit requirement is fulfilled. Now, under the limited benefit requirement, a company has to prove that they have business in Singapore as well. They're just not registered there, they have business there. So only if Flipkart and Walmart are able to ensure that those clauses are fulfilled will they get the benefit. Otherwise, they are liable to pay taxes, and the taxman will be keeping a close eye in this case.
Rishi, considering the valuation is expected to be 20 to 22 billion pre-money, I'm sure they'll be keeping a close eye. The Singapore angle is interesting, and Flipkart's had a history of run-ins with the tax department. The recent one being where the tax department wanted their discounts to be classified as capex, but luckily Flipkart got out of that one. But we will keep in touch with you to know what the taxman is going to do when it comes to Flipkart. But to take this discussion forward, we have two special guests joining us on ET Now Startup Central. We have Sanjay Nath, a managing partner with Bloom Ventures, as well as Rehan Yar Khan, a managing partner with Orias Venture Partners. Both of them have invested in some of India's most successful companies, unicorns, and we're just going to go across to them to find out what this deal means from an investor perspective, from an exit perspective. Sanjay, I'm going to take it to you because you've managed a very good exit with, the E2E IPO. I keep reading reports about how it's been oversubscribed. So is this Flipkart Walmart deal also a validation of sorts? I mean, a huge chunk of it is a secondary sale. It's not gone public, but would you still say it's a very good validation of the Startup India story?
Yeah, hi, good evening, Chandra. Hope you can hear me fine. Thanks for having us. So, what I'll say is one of the sort of constructive criticisms or feedback about the Indian ecosystem has been the lack and the scale of exits. So it's interesting, you have E2E on one side, and we're very proud and happy about that. That was on a, not oft very well-known SME exchange, but I think it's a, wonderful value proposition. And now you've got Flipkart. So I think what it's really, to use a cliche, it's really, the Indian ecosystem coming of age. What we really need in the ecosystem is money coming out, money going in, money coming out, because it shows that, that shows that entrepreneurs can get exits, that VCs can get exits, which is healthy for the ecosystem. Now, the scale of Flipkart is really large. I think it bodes well. Of course, you've got to show that it's not just one, and we need many, many more of these, but it's definitely overall positive for the ecosystem.
Right. Rehan, if I can come to you, what do you make of this mega deal? You were one of the first investors in Ola, and, Axel is one of the first investors in Flipkart, and finally you're seeing exits happening for some big investors, including the likes of SoftBank, which is expected to exit completely. What do you make of this mega deal tomorrow?
Hi, Chandra. Chandra, I think I'll give you the entrepreneur's perspective. Sanjay has spoken about the investor's perspective. So I think this deal is, it's massive for entrepreneurs. Now, let's look at who an entrepreneur is. An entrepreneur is an individual who is very talented, is probably, is in a nice job, and he or she has taken this huge risk by starting a company, actually investing some of their own money, then coaxing friends and family to put in some money, and then, taking money from funds. So I think, a deal like this, where in 9 years, right, Flipkart was founded in 2009, and 9 years later, we read in the media that the Bansals are both going to walk away with $1 billion plus. I think it's a tremendous boost for all those young people out there that want to become entrepreneurs, because it shows that your passion can actually be backed by, by making some good money. on the back of it. And I think some of these exits which are coming up, we read about Delivery filing for an IPO. Nazara is Nitish is somebody I've known for a long time and is a good friend of mine. He's coming up with an IPO very soon. There are other companies that we keep reading about which are going to IPO. So I think it's a tremendous for entrepreneurship in India that they're going to make money out of all the sweat that they've put in all these years.
Right. Rehan, I have a quick follow-up question for you. You mentioned both Bansals walking away with $1 billion, but I think it's only going to be Sachin Bansal for now. While Binny is expected to sell maybe a part of his stake, he's not going to exit completely. He's going to continue. So is this also a rare example of a sale where you have two founders, who've been synonymous with the startup since it was founded, Sachin and Binny Bansal. And it's a bittersweet moment that, after this mega strategic sale, Sachin walks away, Binny stays on. Perhaps Sachin exit is good because he's going to plow that money back into the ecosystem. But, I mean, that's a rather sad end to the tale, isn't it? The fact that the founders are not going to be part of the same ship anymore.
Well, as Buddha said, a long time ago, nothing lasts forever. So I think that's the reality of life. We can't just have everything perpetuating forever and ever. There are multiple outcomes, right? There are outcomes where companies IPO and then the founders continue for a long time. And then there are outcomes where, somebody large comes and acquires you, and it's considered a very good outcome. And you walk away with $1 billion. I don't think about it. One can very romantically look at it and say, no, it would have been a better outcome had it gone to the stock market, and then they would have continued forever and ever. But I think it's a wonderful outcome. I think it's an outcome, it's a story of real value creation. Walmart is obviously a smart company which has seen real value and wants to pick up the baton where the Bansals have left off.
Right. Stay on with us, Rehan. I'm going to go to Sanjay and come back to you. Sanjay, a lot of critics will say, where is the Startup India story amidst all this frenzy? Because the Indian e-commerce battle is now going to be fought between Amazon versus Alibaba versus Walmart. So, where are the Indian entrepreneurs here? Is that perhaps going to be the price we pay because we've been too dependent on foreign capital? Domestic investment in startups and e-commerce hasn't taken off in a big way. You haven't seen the established conglomerates participate in the story in as big a way as, the foreign hedge funds, the Japanese and the Chinese investors have. Is that the price that Indian entrepreneurs have had to pay ultimately?
Chandra, great question. I think I'll go back to what Rehan was also saying earlier. You've got to go back in history that the benefit that China and the US had is they leapfrogged, the brick and mortar industry, and many of them became internet only, right? We talk about mobile first or mobile only. They became internet or tech only giants, right? Look at Google and Amazon and everybody, and this is why they're using their war chest to acquire. Now, if you look at the Indian, retailers and a giant, they've all dabbled in it, right? They're all becoming stronger, and they're making inroads. If you looked at China, it's a quote-unquote closed ecosystem. So therefore, the local Chinese behemoths have become the leaders. In India, we're open, right? We're open to everything, which is why you've got now Flipkart versus Amazon. That's what the battles come to. But I think it's going to take time, right? What's positive in this is, again, I'm coming to the positives, is that hopefully it's going to create a lot of more entrepreneurs who say, listen, I put my blood, sweat and tears, and forget $1 billion. Even if I get 100 million or even 10 million, there is light at the end of the tunnel. Investors will also say that, we were early in this and we were able to cash out, and I'm going to put more money back in. So that's positive. I think it is going to take some time to catch up. If you look at, what the Chinese and the Americans are doing is they're saying we'll build versus, buy versus build. We'll partner with the best, right? Flipkart in this case. SoftBank and Amazon have come into Paytm and, of course, into Flipkart. So I think there is light at the end of the tunnel. What this has really shown is it's shown a full life cycle, which India hadn't had. And like Rehan also was saying, it's shown a full life cycle of massive scale, right? This is not just, I mean, you're talking about $1 billion each for the founders. Forget $1 billion total exit. So I think it's positive. What we need is we need many more of these. And I think the most important is that it'll fuel the highest quality of young engineers and sort of management graduates who will become entrepreneurs, right? You want the best quality coming in. So overall, it's positive. Of course, now it's going to be the next level, which is Walmart versus Amazon, which is fine. And hopefully it'll take some time to change where we can truly see independent Indian companies who maybe one day they don't have to sell out to the big Chinese or the Americans, and they will go IPO themselves. They can be independent. But for now, I think this is fine, right? I don't think anybody's complaining.
Right, right. I don't think the investors or the founders are complaining. But Rehan, I'm going to, give you the last question. The upside for Flipkart is pretty clear here, but what's the upside for Walmart? Online retail is still a very small part of commerce in India. It's just about 1%. The rest of it is physical retail. Walmart has no say when it comes to FDI and multi-brand retail. They operate cash and carry. And even within that 1% of online retail, Flipkart's locked in a battle with Amazon and Paytm Mall. So what's the upside for Walmart here? What are they hoping to get? Will there be a grocery push? Will it lead to a Kirana push? Just wondering what we can expect on that front.
Well, I think looking at it very simply, Chandra, they are acquiring an online brand, which they're going to continue growing. It may be 1%, but tomorrow it can become 2%, 3%, 4%. And it's certainly a very important segment. These large MNCs, they keep acquiring brands, and they do it in their own country as well. They acquire Jet.com in their own country, and they acquire various other brands there. And now they've acquired a brand internationally. I mean, these guys may come and acquire some kind of offline brand tomorrow because they are essentially in the retail business. So I think very simply from their strategy, they would use Flipkart for what it is. It's a powerful online brand, and they would continue growing it. I would be a little surprised if they start using that brand for all kinds of other things, because surely they can go and acquire other brands, to do that. I mean, that's my thinking. I'm not sitting on the strategy team of Walmart. Maybe they've got other thinking. I think it's a great question you may want to pose to. This announcement is happening tomorrow, to the CEO as to what are they thinking, but I'm just kind of speculating from the outside.
Right. On that note, thank you so much, Rehan and Sanjay. We will keep coming back to you as that announcement becomes official tomorrow. But before we take a break, what was Sachin Bansal and Vinny Bansal thinking about, planning about, worrying about way back in 2010 when ET Now interviewed them? So that's, how long we've been covering Flipkart closely. Take a look at some of the earliest problems that Flipkart faced, how Vinny Bansal battled rain to deliver the first book himself. Here's a throwback moment from the Flipkart story.
My side, definitely there was a lot of apprehension. There were a lot of online bookstores who had started and folded. People were not really very keen on seeing another online bookstore come up and bringing in the same kind of promises that the others have brought. So initial challenges were definitely to make them see that we were different, that we are here to stay, we are here for long-term business. What we have done from our side is to educate them, is educate the suppliers, the distributors, how online works, what is the expectation of an online customer as compared to a physical retail customer. We have worked very closely with them, with all the courier guys, all the large courier companies, all the large distributors in India.
I mean, setting up a company itself was a huge challenge, so we didn't invest a lot of money, we invested our own funds, right? So we started working from home, and even getting a payment gateway registered for your company was a big challenge, because they needed an office, they needed a telephone line, they needed your 2 years bank statements, and we were just starting up. We asked them, I mean, how does a startup get a payment gateway? So that was a major thing. Then obviously tying up with suppliers, convincing them. So we basically went to bookstores and bought books.
Welcome back to Startup Central, and in what is a rise with India moment, Microsoft founder Bill Gates has decided to invest in one of India's leading impact investing funds, that's Unitas Ventures. In fact, Bill Gates tweeted earlier this morning that his decision to invest in this fund really indicates his optimism on the India story, and that's the reason why he's decided to invest in one of the top impact funds of this country. But where is this money going to? What sort of startups is it going to fund? Who better to tell us about that than Srikrishna Ramamoorthy, a partner at Unitas Ventures, who's joining us live from Dubai, where he currently is. What pitch did you make to Bill Gates to convince him to invest in Unitas?
So it's great to have someone like him coming back into our second fund. He liked what we've been doing. He's an investor in our first fund as well, and he liked what we were doing with the second fund. And I think the kind of startups that we've been investing in healthcare, education, and I think the kind of impact that the companies have created, I think it's a combination of both of those that appealed to him, and I think that's what's driven his decision to come back into the second fund. And the fact is, we've made over 23 investments now from the first fund. We've impacted 1.2 million lives, and there's also a demonstration of the fact that you don't have to compromise on financial returns in order to be creating social impact. So I guess it's a combination of all of those that's appealed to him, and he's made a decision to invest in us again.
Right. Before I let you go, Shri Krishna, very quickly, your release says that you are going to identify 25-30 startups to deploy that 100 crore from your second fund. Are there so many startups in the market that are working on, creating impact in education, healthcare, inclusive fintech, as you say it, and, which cities are these coming up in?
So the answer is a resounding yes. We see entrepreneurs that are focusing on solving these problems for India all the time. At this point in time, we've already made 6 investments from our second fund. We have an active pipeline where we've got term sheets out to at least another 3 or 4. So the quality of entrepreneurs is definitely on the rise, which is true with all kinds of startups. But more importantly, we're seeing a lot of entrepreneurs say, all right, let me go after solving problems that can transform lives of people living in India. So we are seeing a lot of entrepreneurs in these sectors, and I think if you walk out on the street and look around you and try to think of what are problems that I could be solving, it's fairly apparent that the 3 sectors that we're looking at are the ones where the most pressing problems are. So I think there's a lot of good thinking that's going into entrepreneurs' minds, right, and saying, all right, let's look at this.
Right. On that note, thank you so much for joining us all the way from Dubai. Hope to meet you once you're back in India. But on that note, completely out of time in this edition of Startup Central, 2 Rise with India stories to take inspiration from. One, of course, is Flipkart, and the other, of course, is Unitas, which is now backed in its second fund also by Bill Gates and the Michael and Susan Dell Foundation. On that note, thank you so much. Stay tuned to ET Now for more news and updates.